Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Kayar. The sell-off has intensified. It's a 500-point cut on the Nifty that we are looking at. Midcaps participating too. We have the Bank Nifty, which is sitting with cuts of almost 1,000 points. Almost all the sectoral indices are in the red right now. We had metals which were doing well, but that's been quite volatile as well. And usually we talk about the mid-caps on the show, but just look at the way some of these large caps are falling. HDFC Bank, ICICI Bank, SBI, all these major names at the day's low. The question is whether there is more correction ahead.
The question is whether there's more correction ahead. We've started off the second half of the trading week, after a midweek holiday on quite a negative note. It's a screen and it's a sea of red that you can see on the top of your screen as well. So quite a lot of correction is seen both in the front line and even the broader end of the markets, especially if you look at the advanced decline ratio across the NSE 500 mid-cap, small-cap index, it is extremely weak. So indicating that, declines are far outpacing the advances. But quite a lot lined up on the show. Let's start off with the top headlines. Stocks see a sharp fall following renewed tension in West Asia following Iran's missile attack on Israel. Realty and automobiles are the biggest losers, with metals and pharma trading flat.
Steel stocks like Jindal Steel, JSW Steel, Tata Steel buck the overall market trend after Morgan Stanley says China's recent stimulus should drive positive sentiment and support steel prices. Nomura initiates coverage on JSW Steel, and JSPL says continued deleveraging to support Indian steel majors.
Dabur trades under pressure. The stock is down more than 6% following a guidance of decline in revenue as well as margins in the second quarter in the company's Q2 FY25 business update.
Crude oil prices hold gains post Iran's attack on Israel. OMC paints and aviation stocks under pressure. Okay, so Nifty is below that 25,400 mark, just at the 25,300 mark as we speak. It's almost a 500-point cut that we are looking at the day's low. It's been a one-way slide since the time we have opened and we have started trading today. And this comes in after that holiday that came yesterday, and a lot happened in the last 48 hours. Right. It's been really busy, whatever we've seen in terms of tensions across West Asia, and that's something which is impacting the markets. Reliance is a big drag today, almost 76 points there, followed by HDFC Bank and ICICI Bank. So all these major movers are leading to the losses that we are seeing today. Mid-caps, again, lower in trade today. We have the Nifty small cap, which is sitting with cuts of 2%. Actually, there's none of the sector which is in the green.
That's right. Oil prices aren't up by too much. It's not a very sharp spike that you're seeing, just $2 to $3 a barrel. But all of the oil sensitives, look at, all of the OMCs, HPCL, BPCL, all of them are taking quite a deep cut. Even paint stocks today, even aviation stocks, all of them actually seeing quite a bit of correction. But I'm sure Hormaz has these as well as a whole host of other names on his list. This is our special segment, Midcap Movers. Hormaz is at the wall, and he'll take us through the midcaps that are moving.
The color is red, and a very deep red for the benchmark indices and for the broader markets alike in today's session. The sell-off just intensifying. The mid-cap index is now down 1,200 points at the lowest point of the day. So we'll start off with some of the losers within the broader markets, and there are plenty of them, mind you. Dabur is now down 6.5% after the business update, as is HPCL. Almost all the oil marketing companies are down in today's session after that rally in crude oil prices. Godrej Industries and Brigade Enterprises are some of the other losers within the broader markets. Now, a sector that we used to talk about at its prime almost every single day, but we don't talk about it anymore, is the railway stocks. And these railway names have now corrected anywhere between 30 to 40% from their peak. And today is no different. Titagarh is the worst performer among those railway names, is down 40% from its peak now. IRFC and Ircon are some of the other losers in today's trading session. Some of the other names that are not doing so well in today's session, actually some of them yes, some of them not. The FNO norms, the impact that it has had on BSE and Angel One off the highs of the day, but still holding on to gains. Can't say the same for IIFL Securities and 361 WAM. Stocks doing well or not so well on the back of volumes in today's session. And Just Dial, Jubilant Engravia, Amber Enterprises, some of them bucking the trend, gains of around 3.5 to 4%. And lastly, a lot of brokerage commentary that emerged from the morning, and JSPL is one such stock still holding on to gains. Petronet LNG is an outlier, 6% 2% higher after that upgrade that has come in, as has KPIT Tech, almost 2% higher in today's session. But overall, the color is a deep red. Back to you guys.
It is, but some of them are defying the market moves today. But take that point. Thank you so much, Armas, for joining in as always. It's time to get a technical check on the markets. Vinay Rajni of HDFC Securities is joining us for that. Vinay, tell us what are the next important levels to watch out for on the Nifty and your individual picks.
Yeah, good afternoon and thanks for having me on the show. So from the all-time high of 26,277, Nifty has fallen by 1,000 points, and the next support I see in the Nifty is around 25,070. Which is nothing but the 50 days exponential moving average. Earlier in the August, when Nifty fell, it found support at 50 days EMA and bounced back nicely, and again registered a new all-time high. This time the 50 days EMA is placed at 25,070 odd level. So this is the only support I see, and this correction is deep and sharp, and this can continue to be like this. We are not getting a 50 points bounce back in the intraday also. So there is a huge amount of selling pressure which is there in the Nifty. So I see a support around 25,070, which can act as a support for the short time. So on the higher side, 25,400 now becomes a strong resistance. So unless we close above this level, the trend should go like this only. So the next support is 25,070, which is 50 days EMA. The stock I like in the mid-cap segment is relatively can do well is the diagnostic stocks like Vijaya Diagnostic, which is placed around 970 odd levels. So the entire diagnostic space has been resilient, and I think Vijaya Diagnostic stock can outperform this market. So around 972, one can take risk. Stop loss can be kept at 950. On the higher side, I'm expecting a target of 1010. So this could be on the long side. On the short side, I would go with the selling Ashok Leyland, which has given a fresh breakdown. So if somebody wants to look for the short trades in this kind of markets, Ashok Leyland can be shorted around 232. Stop loss can be kept at 236. And on downside, I'm expecting a target of 224.
Okay, thank you so much, Vinay, for joining us and giving us both a view on the market as well as your individual picks for the day. Let's now slip into a short break. Jitendra Adya from Atul Auto joins us next to discuss September sales as well as business outlook going forward. Stay tuned.
Welcome back. Well, a quick look at the Nifty because we've fallen below the 25,300 mark. It's a more than 500 point cut that we are looking at, and it is led by a lot of components, but HDFC Bank, that is one name that you should watch out for. That also is at the day's low. So we'll keep tracking all these market moves for you, but let's move on and talk about a corporate conversation. Atul Auto is in focus. For the month of September, company witnessed total sales of 3,361 units, which is up 26%. They also sold 978 units for EVs. Jitendra Adya, the President of Finance at Atul Auto, is joining us now. Mr. Adya, good afternoon. Thank you so much for joining in. Well, your total sales year to date are up 47% across all the segments. Is this something you will be able to do in the second half of this fiscal as well? What is the total growth you're anticipating in volumes, and ultimately what would that mean for your revenue growth?
Very good afternoon to you. I'm really excited to see the September numbers. Obviously, in the first half last year, the first quarter was disrupted because of non-availability of OBD good compliance. So, obviously, we cannot expect the similar growth in a second half, but definitely it would be more than decent. And in overall sales, we expect that we will be able to deliver much better numbers compared to the last year.
Okay, so you're expecting year-on-year growth. Can we pin you down to a specific guidance in terms of volume growth that we can expect of FY25 compared to FY24?
Absolute numbers would not be possible, but obviously
a range maybe.
Looking at the quarter first half numbers, definitely it will be much better than the last year.
So you had earlier indicated it would be a 20% growth in FY25. You would be back to pre-COVID levels. EV contribution should stabilize at 25 to 30%. Is that a doable number, or you'll actually exceed this guidance as well?
I am still on that stand only, and definitely expect a similar pattern of growth going forward as well. As long as EV is concerned, as you have mentioned earlier, almost 1/3 has been contributed by EV in our overall sales. That really gives us more confidence. we are setting up exclusive as well as composite dealership for sales of EV. Along with that, alternate fuel is getting settled into the market, and we expect that in whatever overseas market we have exported the volume, where we have repeat orders, and going forward we will be able to gain numbers from export market as well. So in totality, all three fuel is definitely going to contribute.
Okay, so you're speaking about the export markets. Give us a sense of how numbers there are panning out. Give us a sense of the targets you've set for yourself, and also give us a sense of the margin differential you enjoy, by exporting your products versus the domestic market.
See, let me answer your last question first. The margin profile is more or less same, not much of a difference, but obviously export gives us a little better margin compared to domestic one. About volume, we are still into a seeding phase. Currently, 10% is revenue is being earned from export market. I believe that going forward, this may increase anywhere between 15 to 25%.
All right. Most of your volumes are coming in from the Ahmedabad plant. The last known utilization was 50%. How much has it increased to by end of this year? What will the utilization number look like?
See, as a part of economization and considering the current situation, we are operating from Ahmedabad plant only. Rajkot plant, we are doing machining and engine assembly is being done over there. So that capacity is intact, and once we are able to utilize our current plant capacity, that is from Ahmedabad, we will activate that plant as well. As of now, the total utilization is Ahmedabad capacity utilization is anywhere between 60 and 70%.
Mr. Ajay, just to give us a sense of how policy action is actually helping you currently, and also, going forward, do you expect some of these incentive schemes to eventually wane, and do you expect that will have an impact on your demand? You've set very, ambitious targets as far as the electric part of the business is concerned, but do you feel that the waning away of, some of the incentive schemes that are currently present could have an impact on demand?
As long as EV is concerned, yes, it will definitely have, as long as, lithium-ion prices are not stable, and it is expected to drop further. So once it comes into stable form, and once the technology itself is stabilized, because when we are talking about lithium-ion, people started talking about solid-state battery as well as sodium-ion as well. So from OEM point of view, we would definitely like to see how the trend moves. But as long as government incentive is concerned to promote use of EV, definitely it will help. And this time, PM E-Drive, which is covering comprehensively, even for testing agency and putting up public infra, that will also going to help OEM to accelerate their sales process.
All right. Mr. Adya, thank you so much for joining in today with that take. Would have liked to talk a little more about markets, a big fall that we are seeing there, but we'll be speaking to you very soon again. So we are below that 25,300 mark and just at the 25,250 mark right now. So there's a further fall that we are seeing right now. We'll discuss that. But as we slip into a short break, here is some good news for the viewers. India's business news leader is now click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store.
Welcome back to Midcap Radar. Well, all of the key indices continue to see accelerated selling pressure. The Midcap and the Small Cap Index now have seen cuts of more than 2% in the intraday session. On the other hand, the India VIX is spiking. India VIX is now up almost 14% in the session. And which are the sectors that are seeing the most amount of pressure? Well, the OMCs for one. So look at names like HPCL, BPCL, IOCL. Also look at some of the paint companies. So look at names like Asian Paints, Berger Paints, even Grasim, with its paints for it. That too is seeing quite a bit of cut today. And one pocket of the market today that is seeing quite a bit of sell-off is actually the realty pack. So if you pull up names like DLF, Godrej Properties, Oberoi Realties, all three of these companies, along with some of the other real estate names, are seeing quite a bit of a sell-off in the session today. The realty index is down over 4% in the intraday session. But moving on, there was a stellar listing. KRN Heat Exchangers made a stellar debut on the exchanges and listed at a premium of 118%. Upasna is here with more details.
Well, that's correct. KRN Heat Exchangers makes a stellar debut on the exchanges with a 118% premium, lists at 480 per share versus the issue price of 220. The issue size was around 342 shares with a fresh issue of 1.5 crore shares, and post-issue, the promoter holding now stands at 70%. Now, let us look at what the company exactly does. The company mainly manufactures aluminium and copper tubes, condensers, and evaporator coils, which are mainly used by OEMs in heat, ventilation, air conditioning and refrigeration industry. Now, the entire manufacturing operations of the company takes place in Rajasthan, and company derives 33% of its revenue from a single customer, that is Daikin Air Conditioning India Private Limited, and 72% of its FY24 revenue was contributed by its top 10 key customers. Now, in terms of key customers, it includes some notable names such as Schneider Electric, Blue Star and Voltas as well. Company aims to expand its customer network in Europe and North America, and FY24 exports stands at 15% of its revenue. Now, what was the key objective behind this listing? The company aims to enhance its existing product base by setting up a new wholly owned subsidiary, that is KRN HVAC Products Limited, mainly to manufacture value-added products in heat exchanger category, which are currently not manufactured by the company. Now, let us look at FY24 key financials. The revenue has seen an uptick of 24% on a one-year basis, while the gross profit remains flat at 26%. EBITDA margin has seen a downtick of 100 bips on a year-on-year basis, stands at 18.9%, while PAT has seen an uptick of almost 22% on a one-year basis.
Thank you, Upasna, for joining us with those details. Let's now hear in what the management of KRN Heat Exchanger had to say on the capacity plans and demand outlook. Listen in.
We call our industry like HVAC and R industry, heating, ventilation, air conditioning and refrigeration. So it's, to be honest, it's really growing in India as well as maybe in North America and Europe also. So we are the main product manufacturer for this industry, heat exchanger. So for us it's really good, and you can see our last 6-year journey. So we achieved the data as well. No, for us, if you study our RHP or something, we going for 6x capacity increase. So we feel there is a demand. So that's why we are increasing our capacity in 6x. Some data in air conditioning we have in India only 8%, and in China I think 80%, and USA 90%. So we have long journey to achieve this. So based on that, we increasing our capacity, and it's I think next 20 years in India time for this industry as well.
Well, a stellar listing as far as KRN Heat is concerned. But with that, it's all the time we have on this edition of Midcap Radar. Closing bell when we return.